Welcome to session 6. In this session we're looking at worked examples. We want to use the principles that we've learned in the previous sessions and apply them using worked examples. Okay, now we are going to use what I call a 3-step process in posting transactions. Okay, now the 3 important steps that we need to follow that will help us in posting transactions. The first step is you need to identify the transaction or the transactions. Is it an asset? Is it a liability? Is it an expense? Is it an income? That's the first thing that you need to do. The second thing is then identify whether the account is increasing or decreasing. And then thirdly, you then debit or credit the account depending on what type of account you are dealing with. Okay, now let's just go over what we've been covering concerning double entry and the rules for accounts. We said that if an asset is increasing, we debit. If it is decreasing, we credit. If it is a liability that's increasing, we credit. And if it's decreasing, we debit. If it's a capital account that's increasing, we credit. If it's decreasing, we debit. If it's an expense account that's increasing, debit. If it's decreasing, credit. Okay, fantastic. Now let's look at our worked example. Okay, here's an example. You start a business by depositing $8,000 into the bank account. Okay, what are our 2 accounts? Our 2 accounts are bank account and capital. Okay, the bank account is increasing. The capital account is also increasing. Bank is an asset, capital is a liability. What do? We debit bank and we credit capital. Okay, let's now post these transactions into our T accounts. So we've got 2 T accounts. We've got a bank account and we've got a capital account. In the bank account, we're going to deposit 8,000, narration capital. In the capital account, we're going to credit 8,000, narration bank. Fantastic. Let's look at another example. Example 2. In this instance, we've bought a motor van worth $650 and we're paying in cash. Okay, let's identify our transactions. We've got motor van and cash. Those are the 2 accounts, and they're both assets. Motor van is an asset, cash is an asset. Motor van account is increasing, cash account is decreasing. What do? We debit motor van, we credit cash. Okay, let's now post these transactions in our T accounts. And here's our 2 accounts, motor van, cash. What do we do in the motor van? We debit cash, $650. What do we do in the cash account? We credit cash. We credit cash with motor van, $650. Fantastic. Let's move to our 3rd example. Okay, we sold a machinery for $250 on credit to R. Taylor. That makes R. Taylor a debtor. Okay, so our 2 accounts are R. Taylor, debtor, and machinery. Okay, the debtor's account is increasing. The machinery account is decreasing. Okay, what action do we take? We debit R. Taylor's account, and we credit machinery account. Let's now post those transactions into our T accounts. Our 2 T accounts are R. Taylor, machinery. In R. Taylor's account, we debit $250, narration machinery. In the machinery account, we credit $250, narration R. Taylor. Okay, fantastic. Thank you so much for joining me. I look forward to seeing you in the next session. Bye.